Hello, my name is Anton Novikov. I'm working as financial analyst at Financial Market Consulting, and today I'm going to introduce you the investment portfolio for July 2016. But first of all, I'd like to start from overviewing the current situation in the financial markets around the globe. So currently we've experienced the referendum and as a result the leaving of the UK from the Eurozone. So this referendum was conducted on 23rd of June, and their citizens of the UK were given the chance to vote for yes or no for leaving the Eurozone or for staying in the Eurozone. So they decided to leave, and now we are experiencing the consequences of this decision. So all their financial markets got into the turbulence when they were moving almost by the USA by 5%, European markets by even more, due to their emotions, which took all of their participants, all the financial markets. The consequences, the real consequences for the Europe and for the UK are unknown. There is no clear result, there is no clear decision or announcement made by officials of how this leaving would impact their economies of the Eurozone or the UK. Definitely bad thing happened, but we don't know the clear result. So, but actually the USA, the Eurozone showing us their good economic performance, and the macroeconomic indicators are supporting these words, because their manufacturing indexes, servicing sector indexes showing us positive numbers. They are growing, and the same thing is going on in the USA. This happening with USA as well. The manufacturing sector, the service sector are showing really good numbers. They are actually amazing, because they are beating the forecasts made by their analysts around the world, and they're showing really positive news to us as well. We must admit that their job market in the USA is performing well, and there are a number of people which are unemployed decreasing for fourth or third consecutive months. So all of these tell us that the USA economy is growing and performing really well. So this state of economy of the United States let us think about buying the stocks which are represented and recommended you for buying or adding to your investment portfolio. And the first company which we consider buying for the investment portfolio for July is Yahoo company. The Yahoo company is currently traded. It's currently been traded at the price of $38 per share. The prospective growth of the Yahoo company's shares is $44 per share till $55 per share. It is good to buy Yahoo shares at this price based on their news related to their recent purchase of Microsoft by of LinkedIn by Microsoft. The shares of the company which was bought as LinkedIn increased in value almost by 50% after the Microsoft announced that it has bought the company. So it's really good news, and based on this news which is going to happen with Yahoo, the Yahoo is going to be bought by another company. There are many companies which announced their desire to buy the Yahoo company, and due to their announcement made by their officials of Yahoo company, they said that the result of the buying process would be the 18th of July, and this date is going to be the date when it would be the announcement made announcing us which company has bought their Yahoo company. So on the Wednesday this week, it was the last day when the financial conditions were discussed, and the bidders finalized their decisions and declared and sent to Yahoo their proposals with financial numbers related to their process of buying. So, due to this news and the news related to Microsoft and LinkedIn, we consider buying the stocks of Yahoo, and the perspective growth, as I said, $44.55 per share. The next company which is considered for adding to their investment portfolio is International Paper Company, producing packaging products like cups, envelopes, and other stuff related to packaging goods. So this company has recently sold their production in China due to their expensive because their production there was quite expensive, and almost all of the raw materials for production in China were imported abroad. So they decided to close and sell their production for $150 million, and they're not leaving the Chinese market. They're going to import their final goods to China from Russia, because they've got their production in Russia. But they also bought their production in Spain. Holman Paper Madrid company has already been bought by International Paper Company, and thus they bought it due to their interest of decreasing their expenditures and thus increasing as a result their revenue of the company, because the euro is falling, the US dollar is going to be more in value compared to the euro. So it is good to open business in Europe and produce a business and sell abroad. So currently the International Paper Company is being traded at a $43 per share, and the prospective growth is $50 per share till $60 per share. So due to the positive news related to International Paper Company, we consider buying the stocks, and as the result of decreasing their expenditures, increasing their income, thus the company shares would go up till 50, 60. The next company which we would like to add to their portfolio is Merk&Co. This company produces pharmaceutical products, drugs, like the last one was the drug against their cancer, like Keytruda, and the company has bought the Ferrin Pharmaceuticals. So it introduced the new product to the market, which would bring, according to the forecast made by the company, almost $31 billion by 2020 as income. So also their Merck company expanding the number of products it is selling in the market, and thus increasing their income as well. So currently the Merck is being traded at $58 per share. The prospective growth is $33 per share till $70 per share. So this company has been operating in the market for a long time. This company introduced new products, expand the set of products it is offering to the market, thus it increasing the income, decreasing the risks of falling sales, and it has the potential of growth of the price of the shares due to the positive news which I've already announced. And the next company which we consider adding to the investment portfolio is Walt Disney Company. Walt Disney Company is currently being traded at the price of $98 per share. The potential growth is 115 till $120 per share. So we consider buying the stocks at this price and selling at 115 till $120 per share. We recommend to consider buying the stocks of Walt Disney Company due to the positive news. Walt Disney launched the Walt Disney Park in China. The size of this park is almost 4 million square meters. It's a really big size of the park, and almost 300 million people living around 1 to 3 hours driving by car distance, so it's not far from the park. So almost 300 millions of people living quite close to the park, and thus it gives the chance to Walt Disney Park, according to their number of people which may visit the park, and this number is about 15,000 till 90,000, the number of people which may visit the park on the daily basis. So thus 300 million people living almost closely to the park, and with this amount of people which may visit the park on the daily basis, the Walt Disney has made the really good decision when located this park there. So they almost sold potentially all the tickets for 90,000 people for their next 5-6 years. So it's a really big number and really big income for the Walt Disney Company. So thus also it is worth to mention that their movie which their company introduced lately, their Finding Dory, has already brought almost $400 million for the free last weekends. So it's a really big number, exactly when the budget is almost just $200 million, and it's really good news for the Walt Disney Company. This company is operating in the market for a long time, and it's really good news, and we consider, due to this positive news, that the price of the Walt Disney Company would go up from 98 to 150, 120. And the last company which we consider to add in their portfolio is Apple Company. The current price at which their shares of the Apple Company have been traded is $96, and their potential growth of their shares of the price on shares of Apple Company is $120 $120 till 135. So we consider buying the shares of Apple due to the positive news. The Apple decreasing their price of products which it is selling to customers. Thus it would increase the sales, as the potential customers like when the price of the products they buy decreasing, and almost it launches new production lines in India, opening new stores due to the change of the legislations, as only 30% of the tails used in production of Apple goods must be produced in India. It meets the requirements of the company. Thus, it makes the Apple to open the production in India, because the new legislations related to production, as I said, only 30% of the details must be produced in India, let the company to enter into the market, Indian market, and sell the goods there. And the market is really good, really big, and have a good potential of increasing the sales as well as the income for the company Apple. As well, the company Apple buying their Jay-Z's company known as Tidal, thus increasing their number of subscribers almost by 300 million. There are thousands of video, music tracks which you may listen and watch on the resources of this company, and it goes along with their program of Apple to increase the number of subscribers of Apple service, Apple Music. So thus it makes their company to earn more income, and by following this, the prices of Apple shares would go up. Due to this positive news, we consider that the prices of Apple would go up because they bought the company, increased the number of subscribers, increased the income, or went to their new market as India, and all of these facts would help the company to earn more and thus increase the value of their shares. So the time horizon of holding the shares in their investment portfolio is about 3-6 months. So that's all for now. Thank you for your time and goodbye.